Welcome to Money Secrets with Bill and Mike.
I'm Bill Alexander.
And I'm Mike Tove. And Bill, we have Ray Kathawa back. And for those that missed, Ray is a very special guest.
Well, he's a great expert. I'm so excited to have Ray back, and our audience is really lucky that we can have him.
He's got national awards in many different areas, and he is one of the founding members of the Independent Excellence Group. And I want to, when we come back from a short break, and we'll hear a little bit more about that. So stay tuned, and we'll see you in a minute. Hey, welcome back. And Ray, welcome back to you.
Thanks
back to the show. And as we were saying last week, you have a number of national awards, but you're also one of the founding members of the Independent Excellence Group. And I'm sure our folks don't necessarily know what that is.
Well, I know that it's a pretty tough organization to get into.
So the Independent Excellence Group is an industry group of some of the top retirement planners, advisors, attorneys, and insurance agents that we bring together, that come together to really search out and seek ways to better serve the consumer in the retirement planning and financial services industry.
And fair to say that it keeps those of us at the cutting edge of the technology, as it were, in this field?
It does. We strive to keep the members ahead of the curve when it comes to retirement planning and financial planning for the clients that we're serving.
And I think that that's a really important point, because last week we were talking about insuring income, and that almost sounds weird. I mean, how do you insure income? And yet we are in an era now, I think, where that is not just an important topic, but a central one.
So there are specific products in retirement planning that advisors and agents and attorneys as well have available to them that can actually create income streams for a person's life. You may have heard of them. I'm sure you have, Mike and Bill. They're called fixed annuities.
Of course, as soon as I mention that to a client, half the time their eyes roll over in the back of their head and they go, oh, those things.
Why is that?
Wait a
Wait
minute. Now, annuities, that's a whole lot of different kinds of products, and you didn't use the word just annuity. You said fixed annuity. So what's the difference between a fixed annuity and other annuities? What else is out there?
Well, I think that's a great question, Bill. It's important to know that there are a multitude of different types of annuities that are available. There are fixed annuities, as I mentioned. There are fixed indexed annuities, which fall into the fixed annuity category, almost a subcategory. There are immediate annuities, which are vehicles used to generate immediate sources of income. There are deferred income annuities, which are annuities that generate income in the future. There are also variable annuities, which are annuities that have market risk and that are tied to different accounts and
right. And so the key is, you know, when people use the word fixed, they usually think that that is like a CD rate, that a fixed rate of return, but that's not really what fixed in the annuity world means at all, is it?
The fixed is really referring to the safety aspect.
Right. And which we talked about last week, is that insurance companies are safe.
Well, wait a minute. Let's describe what is a fixed annuity. I mean, in terms of, I'm a consumer, my advisor has said, I think you should look at a fixed annuity. What am I looking at?
Well, how about we take it one step back? What is an annuity?
Right.
We talked about income here at the beginning just a few moments ago. If you really take the word annuity and break it down to what it fundamentally means, an annuity is a stream of income payments. Many people are familiar with annuities that they have, and they don't even know that they have them.
Right.
Can you think of any forms, Mike?
Oh yes, two. Social Security is technically an annuity, and so is a corporate pension.
Or retirement
pension. Yeah.
I can think of one more that fewer people have. The lottery?
Yes, well, actually, I use that one. No, I use that in my workshops, and that's the funny thing. I mean, in my workshop presentations, I kind of poke fun at this a little bit, and I'll ask, when I introduce the idea of an annuity, I'll ask the clients or the audience, you know, how many of you ever read an article or heard somebody say, I hate annuities and so should you? And a whole bunch of hands always go up, usually about like this, because they don't want to admit it. And I say, so what's the biggest annuities in this country? And it's Social Security and it's pensions. And I say, so imagine the guy that says, I hate all annuities and nobody should have one. What's he going to do? Call the Social Security Administration and tell them to keep your annuity payment, and then call his pension and tell them to keep the annuity payment because he doesn't like them. And then he goes out and he actually wins the lottery, and what does he get? An annuity.
Well, let's get off of that and go back to what's this fixed annuity?
But I want to point out that this is not some evil concoction, and that's a big part of it.
Sure. So of the different types of annuity, the fixed annuity is one that offers principal protection to protect what it is that you put in from any type of risk, market risk, or any type of risk, essentially from losing the principal that you put in.
So if I go into a fixed annuity, I don't have market risk in terms of what happens with the stock market.
True. The fixed annuity has some type of rate of return that's built in to it. It depends on the product that you choose, and again, the annuity portion of it is the part of the product that allows you to create income.
Okay, so how do I do that?
Right.
You know, what do I have to do in order to make this fixed annuity work for me?
You know, one of the common misconceptions is that you put your money into an annuity, and it's just kind of in this black box that you can never access or touch. And Bill, your question was, what do you have to do to make the annuity work for you? They actually have more flexibility to make an annuity work for you than people think.
Well, tell us about that.
Depending on when and how you want to access the annuity, different annuities offer various forms of withdrawal provisions. Others offer different forms of income features that allow you to turn your annuity into a stream of income payments that you can't outlive. Mm-hmm. So you make it work for you by really sitting down with your agent or your advisor or your attorney and going through a real understanding of what it is that you're trying to accomplish and when you're trying to accomplish that, to make sure that the annuity is creating the type of income streams that you need it to.
Well, you know something, I hear a money secret that we've talked about in the past, haven't we?
What's that, Mike?
And that is get good advice.
Well, there's no question about it, because you can't put everybody into the same box. In fact, that's one of the things that just really irritates me, is when I have a person who has one product that they're trying to push on everyone, and people just aren't that way. We're all unique folks, and we all have different financial goals, and we have different needs. So you can't push everybody into a box. And I know that there's more than one kind of fixed annuities, so there are a lot of options out there.
Well, I want to come back and explore that a little bit. So stay tuned. Don't touch that dial. Hey, welcome back. Ray, we were right before the break talking about annuities, and one of the things that folks sometimes get concerned about is this notion of, well, if I have an annuity and I'm getting this income payment and then I die, then the insurance company just keeps the money. But that's not really true, is it?
No, it's not. Typically, of all the policies that I'm aware of, and there may be some exceptions to this, but at death, if there is any remaining cash value in the annuity, the beneficiaries have access to that.
Sure.
Okay, now I know that Mike has talked to me over the years about indexed annuities. Now, is that a fixed annuity?
It is. It is a version of a fixed annuity. It falls into the fixed annuity category.
Okay, well, what is that? What is an indexed annuity? How does it work?
So the different word in the phrase fixed index annuity is index. So your returns essentially are tied to a market index.
Like the S&P index, or when
Sure.
you're saying market, you mean stock market index?
Right. Like the S&P 500 index, that's a commonly used index in indexed annuities.
But I think it's important to point out that people who own an indexed annuity are not actually invested in the stock market. There's no stock market investment there at all. They're
Well,
just using it as an indirect link.
More important to me, I mean, because as you know, I focus on asset protection, and what you told me earlier was that a fixed annuity doesn't carry market risk to me as a consumer. And so even though with an indexed annuity, it seems like I get the benefit of the fact that the stock market tends to have good years, so I get some benefit out of that, but I don't actually have any market risk.
You don't, and the way that a fixed indexed annuity essentially works is it gives the client a portion of the upside of said index, say the S&P 500, and none of the downside. So a portion of the upside, but none of the downside risk. And Mike, you are correct. The client themselves are not invested in that specific index.
Of course, the thing of it, the products are all over the board from one side, one company to the next to the next. There's a lot of variation. But is it also not true that some of these are offering an awful lot more participation in an index than others?
It is. You know, in any product, there's always going to be variances. Some products are going to be better for income. Others may be more geared towards higher accumulation. But at the end of the day, I think it's important to note that they're all safe, conservative vehicles designed to preserve and protect what people have.
Now, the other thing that I hear people talk about, and I want you to address, is the idea of big fees in them or huge commissions coming out of them and so forth, but that's just not true.
Well, again, it depends, Bill, on the type of an annuity that you're talking about. We're talking about fixed indexed annuities here at this point. Generally speaking, there are not big fees within indexed annuities. There can be fees associated with an indexed annuity, but typically that's tied to some type of benefit that you're purchasing.
Well, there are fees built into any type of investment that I'm aware of, and if you buy a mutual fund, there are fees that are built into that mutual fund, and I'm sure that there are reasonable fees built into how your money is invested inside the annuity. And I know that, of course, one of the reasons that there's so many people out there who talk about, particularly to seniors, buying annuities, is the fact that there is a commission to the agent who sells an annuity. I mean, anyone should know that there is a commission that is paid to the person who is involved in that.
There is, yes. And it's important to note when you talk about commissions that are paid on these products, those commissions are paid to the advisor or the agent directly from the insurance company. Those commissions don't physically come out of the client's policy either.
Right. And of course, I'm sure that the commission level varies a great deal from one company or one product to another company.
That is correct. That is correct.
Well, so another thing that I'm interested in, Mike, is that an awful lot of companies require an annuity actually to be annuitized at some point, or if you do annuitize it, they require it for a period of years. But you've told me about some products that do not necessarily need to be annuitized.
Actually, I think quite a few of them do not require annuitization at all, maybe most of them.
Well, I
it's
guess
an option, it's not a requirement.
Well, for our audience, I think we probably need to say, what's annuitization?
That's what I was going to say, Bill.
Exactly.
We're here talking laboratory terms. So annuitization is essentially when you take the lump sum of your annuity and convert it into a payment stream, much like we were talking about the lottery earlier when they give you the chance for the lump sum versus the payment stream. That's annuitization.
Okay, as opposed to the investment increase.
As opposed to your cash value being there for you to access whatever you want.
So in other words, it is very possible, in fact I know this, that many people can just purchase an annuity and then take money out on an as desired basis without having to trigger a finite income stream, or even after a stated period of years can just take it all out and then just go and take care of it.
Yes, you can. There are many options to withdraw income from an annuity that are not annuitization.
So we're going to take a short break and we'll be right back. Welcome back. So Ray, right before the break, we were talking about different ways of getting money out of annuities, including indexed annuities. I want to focus just a minute, kind of the money secret here. Who would want to purchase an indexed annuity? What would be the purpose of it?
The purpose would be for a person near retirement or in retirement to A, protect what they have, so they want to have a safety component, and B, have a reasonable rate of return with the ability to generate income that they need during retirement.
What about somebody who has more income than they need? I actually do run into people that way, and they're really concerned about points of inheritance.
That's a good question. So we see many different types of clients that come our way. And if I had to break it down into 4 categories, people are generally looking for safety. They're looking for some level of growth, accumulation, income, like we talked about, or legacy. They just want to pass it on to their beneficiaries. So as an advisor, as an attorney, when you sit down with your clients, it's important to understand what their end goals are, because certain products will fit better for those types of scenarios.
The other piece to this, and this kind of ties into a lot of what Bill's practice is about, has to do with issues of what happens if something bad happens. For example, a medical catastrophe that requires long-term care need or similar. And I know that a number of products, I don't know that all of them, probably not, but certainly some of them have provisions for long-term care built in.
So again, we talked earlier about this. In retirement planning, you have to plan for the what-ifs, right? We don't know what's going to happen. What if this happens? What if that happens? Different annuities do have built-in provisions that can help individuals in different types of scenarios.
Well, and from my perspective, and Mike and I have talked about this a lot over the years, that it's important for seniors to find products, if they want to invest in this type of an annuity, that they really do need to have a good advisor and to have the provisions that allow them to opt out at certain, if calamity does strike.
Right. And I think that the key, again, now this is going back to a past money secret, is that I think one of the big points behind these is that today, and it's maybe not so much in the past, but in the current era, flexibility that I've been seeing over the last 10, 15, plus 20 years. I've seen annuity products increase the amount of flexibility that they offered, increase the number of choices that that somebody who purchases one can have. And to me, that's a very important component.
They've come a long way. Generally speaking, most carriers want to provide flexibility to their clients to make sure that should the unthinkable happen, or should something happen that we just weren't prepared for, they have some means of dealing with that within the product that they purchased.
Well, Ray, that's one of the reasons why I think the Independence Excellence Group is so important around this country, is because you look at not only the strength of the companies, but the products that they're putting out, and you vet them. I mean, and for the benefit of those members of the Independence Excellence Group. And it's really important that professionals like yourself have, are able to share this with their constituents, with the folks that you help.
Education is key in our industry.
Yes.
Absolutely.
And so things are constantly evolving, and that's why staying at the cutting edge is really so critical. It's the reason why I'm very proud to be a member of Independent Excellence Group. We're going to take a short break, and we'll come back and wrap it up. Stay tuned. So Bill, I think the money secret very simply is flexibility, and make sure that you're talking to somebody who has the breadth of experience to be able to customize. And we're going to welcome Ray back next week as we continue this topic. Until then, I'm Mike Tove with AIN Services. We can be reached at 800-363-2296 or on the web at www.ain-services.com.
And I'm Bill Alexander, founder of W.G. Alexander and Associates. We're attorneys that focus on estate planning, elder law, and asset protection. And I would invite you to join me on Saturday mornings at 11 a.m. on WPTF 680 a.m. for my radio show on Asset Protection Today.
So tune in with us next week, and we're going to continue our conversations with Ray Kathawa from the Independent Excellence Group. And thank you, and we will see you next week.
See you then.